Billionaires grow their fortunes at a speed most of us can't even imagine, and the secret behind their rapid wealth acceleration is hidden in strategies the average person never sees. Stay tuned, because number one will blow your mind. Imagine turning debt into a growth engine rather than a burden, a technique many billionaires master to amplify returns. By borrowing at low rates and investing in high-yield assets, they magnify profit margins while preserving equity. This approach often involves using structured loans, credit lines, or corporate bonds to fund acquisitions, real estate projects, or tech ventures that generate cash flow exceeding the cost of borrowing. The key is disciplined risk management and timing, ensuring the debt service is covered by predictable income streams. While this strategy can boost wealth dramatically, it demands sophisticated financial oversight and access to favorable credit terms, typically reserved for large enterprises. As the debt fuels expansion, the billionaire's asset base swells, setting the stage for the next level of wealth acceleration.
Leveraging intricate tax structures allows the ultra-rich to retain more of their earnings and reinvest them faster than ordinary investors. They employ offshore entities, trusts, and charitable foundations to shift income, defer taxes, and reduce liabilities legally. By aligning investments with tax-advantaged zones, such as opportunity zones or free trade areas, they capture significant savings that compound over time. Additionally, sophisticated use of depreciation, loss harvesting, and estate planning tools can further shield wealth from heavy taxation. While the specifics vary by jurisdiction, the overarching principle is to minimize the tax drag on capital, freeing more resources for growth. This disciplined approach to tax efficiency contributes a substantial edge, enabling billionaires to accelerate asset accumulation at a rate that most people cannot match.
Tax provides a conduit for billionaires to blend impact with profit, channeling funds into philanthropic venture capital that backs innovative startups. By allocating capital to mission-driven enterprises, they earn financial returns while addressing social challenges, creating a dual benefit loop. These investments often enjoy favorable tax treatment, such as deductions for charitable contributions or lower capital gains rates on qualified assets. Moreover, early-stage involvement grants access to disruptive technologies before they hit mainstream markets, positioning the investor to reap outsized gains as the companies scale. The blend of altruism and upside creates a powerful engine for wealth growth, reinforcing both reputation and portfolio performance. As the ventures succeed, the returns are reinvested, further accelerating the billionaire's net worth.
Private capital doors open to a realm of high-return opportunities unavailable to retail investors. Billionaires tap into exclusive private equity funds, leveraged buyouts, and hedge strategies that target niche markets, distressed assets, or complex arbitrage. These vehicles often employ aggressive leverage, sophisticated risk models, and seasoned managers to generate alpha that outpaces public market averages. By committing substantial capital, they secure preferential terms, lower fees, and co-investment rights, amplifying potential upside. The opaque nature of these deals means performance data is less transparent, but historically, top-tier private funds have delivered double-digit returns over multiple years. This privileged access fuels rapid wealth multiplication, reinforcing the gap between the ultra-rich and ordinary investors.
Real estate offers billionaires a tangible, income-producing asset class that can be scaled across continents. By diversifying into commercial towers, luxury residences, logistics hubs, and emerging market developments, they capture multiple revenue streams: rents, capital appreciation, and tax benefits like depreciation. Large-scale investors often negotiate bulk purchase discounts, secure favorable financing, and influence zoning decisions, enhancing profitability. Moreover, real estate can serve as a hedge against inflation, preserving purchasing power while assets appreciate. The ability to leverage properties further multiplies returns, as mortgage financing enables acquisition of far more value than equity alone would permit. This layered approach to property investment accelerates wealth growth in a way that smaller investors rarely achieve.
Digital assets have become a frontier for rapid capital expansion, and many billionaires allocate a portion of their portfolios to cryptocurrencies, blockchain startups, and tokenized securities. These markets are known for high volatility, but they also present opportunities for exponential gains when early positions are taken in emerging protocols or decentralized finance platforms. By employing professional crypto funds or direct on-chain analytics, the ultra-rich can time entries, manage risk, and benefit from network effects that drive token value. Additionally, certain digital assets provide staking rewards or yield farming returns, creating a compounding income stream. While regulatory uncertainty exists, the potential upside has attracted significant billionaire attention, contributing to accelerated wealth accumulation.
Network creates a multiplier effect for wealth, as billionaires surround themselves with other high-net-worth individuals, industry leaders, and policy influencers. These relationships unlock exclusive deal flow, joint ventures, and insider insights that are simply unavailable to the public. By participating in private clubs, invitation-only summits, and strategic alliances, they gain early access to breakthrough technologies, emerging markets, and favorable contract terms. The synergy of shared resources and trust accelerates business growth, while the credibility of a strong network attracts additional capital and talent. This social capital, though intangible, translates directly into faster wealth creation through collaborative opportunities.
Education fuels the engine of wealth, and billionaires prioritize lifelong learning to stay ahead of market shifts. They invest heavily in research teams, attend elite seminars, and consume vast amounts of data, from scientific journals to macroeconomic forecasts. By mastering emerging trends such as AI, biotech, or renewable energy, they can anticipate where the next high-growth sectors will emerge. This knowledge informs strategic investments, operational improvements, and diversification moves that compound returns. Moreover, many maintain personal advisors and think tanks to synthesize information quickly. The disciplined habit of continuous education ensures they adapt faster than competitors, propelling their fortunes upward at an accelerated pace.
Intellectual property, IP, acts as a high-margin, scalable asset that can generate royalties, licensing fees, and exclusive market control. Billionaires often acquire or develop patents, trademarks, and proprietary algorithms that underpin lucrative industries like pharmaceuticals, software, and media. By protecting innovations through legal frameworks, they create barriers to entry that secure long-term cash flows. Additionally, IP can be leveraged as collateral for financing, further expanding investment capacity. The compounding nature of licensing, where a single invention can earn income across multiple markets and generations, adds a powerful dimension to wealth acceleration, especially when combined with global distribution networks.
Legacy planning transforms a single billionaire's fortune into a dynasty that multiplies wealth across generations. By establishing family offices, trusts, and succession structures, they preserve capital, minimize estate taxes, and embed a culture of strategic investment within the family. These entities often manage diversified portfolios, fund private ventures, and support philanthropic missions, creating a self-reinforcing ecosystem of growth. Education programs for heirs, combined with governance frameworks, ensure that each successor continues to expand the wealth base rather than merely consume it. This intentional, long-term approach secures a compounding effect that can outpace traditional market returns, making the wealth growth virtually perpetual.
We've just uncovered the 10 powerhouse tactics that let billionaires surge ahead of the rest, from clever debt use to building a legacy that spans generations. These insights show why the ultra-rich keep pulling further ahead and give you a clearer picture of the financial playbook at the top. If you enjoyed this deep dive, hit the like button and subscribe so you don't miss the next mind-blowing list we drop every week. Which of these wealth accelerators surprised you most? Let me know in the comments below. I love hearing your thoughts.